ages. You are now tuned in to the Investor Show. As you guys and girls can know, this is a late night show, very late night show that I'm coming in late. That the people who can catch this, the audio, not audio, but the video, very live right now. I'm doing a late night show, but it's still going to be a great show if you catch the playback or whatever the case may be. Y'all give me 1 second. Let me switch up my background. Since it's the late night show, I got to show you it's a late night show. So that's how it is. So, ladies and gentlemen, thank you guys and girls for tuning in. You're going to have a very great episode. Today's episode, as you can see in the description box, ladies and gentlemen, we're going to be talking about the stock market. It jumped up 400 points today. Uber wins in London, causing the stock to move up 300%. Forbearances decline, and the durable goods increase. So now, ladies and gentlemen, the thing we're going to talk about as well is what does it mean by forbearances? Forbearances declining, forbearances going up. What does that mean? Also, what are durable goods? How does that play into the stock market and all of the great stuff? So, ladies and gentlemen, as always, this is going to be another great, informative, educational episode. And with this episode, I think you're going to learn a lot and you're going to get a lot out of it. But, ladies and gentlemen, if you haven't done so already, make sure you got to stop what you're doing and tell all your friends and go hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Welcome back to the late night edition. I know a lot of people are in the bed right now, getting ready to go to the bed, and some people are catching the show live. Thank you. So some of you guys and girls will be catching the playback, which is awesome as well. But you're going to have a very great episode. So we're going to go into the stock rebounding. We're going to talk about the Uber case, Uber winning. We're going to look at the official documents of that. Also, we're going to go into durable goods. What are durable goods reports? What does that mean? What does that have to do with investors? Ladies and gentlemen, this is going to make you a better and sharper investor when you know what these reports are about. And we're going to talk about the forbearance decline. And the biggest thing we're going to talk about also is also your the second stimulus package. So, ladies and gentlemen, first thing we're going to get into the stock market rebounding 400 points today. I won't call it a rebound; it's more of a bounce. The market's been going down for the last 2 weeks very strongly, so we saw a strong rally today, and overall, the market's been very choppy. Ladies and gentlemen, keep in mind during the winter months, you usually see the market decline. In the summer months, you see the market go up. In the winter months, you see the market decline. So don't be so shocked and try to worry about why did the market rebound today, what caused it to rebound, what happened, all of the good stuff like that. Just know that we saw a nice bounce. Which was led by the tech stocks and also the financial stocks, the companies that got hit down, that got beat down the most during the downturn. So what does that mean, ladies and gentlemen? That means that the companies that I always spoke about, the tech companies, they got hurt the most. Companies like Apple and Tesla and Microsoft, Amazon, those companies in the last 2 weeks were pushed down dramatically, faced a lot of pressure to the bear side. Bear side meaning the downside to the economy. Ladies and gentlemen, when you look at that, what does that mean to investors? When you look at why you see massive sell-offs, and I did an episode called "Hey, is the stock bubble bursting? What's going on?" And when we say the stock bubble is bursting, the stock bubble bursting means that when I look at all the history right now, I'm doing a very not intensive study, but a pretty good study into the crash of 1907, all the way to the crash. I think it was another one in 1907. I know 1929 definitely was one, but I think one happened between 1907 and 1929. Can't it's not sticking off in my head right now, but definitely started 1907. So, ladies and gentlemen, what does that mean? When you see these massive sell-offs, is that when something is a bubble in asset classes, you will always have bubbles. Things will go up, up, up. Because when do people like to buy? When do people like to invest? They like to invest when things are going well. They don't like to invest when things are going down. Because when things are going down, when we're in a bear market, meaning it's going down, you see the media saying the world is coming to an end. You hear all the bad news and things like that. So people don't like to invest in a down market. When things are going up, like in the housing market, when businesses are going up, when stocks are going up, things like that, people get excited and they like to put more money in. This in reverse always create bubbles in asset classes. So my question, and I post on my YouTube channel, also post on my Instagram, my Facebook. If you're not following us, make sure you're following us. I proposed a question. I said, hey, the Nasdaq. You see the Nasdaq taking these big declines. If you want to know if the Nasdaq is overvalued, you got to ask yourself this very crucial question. That is, if the Nasdaq is overvalued, what are the most heaviest stocks tracked into the Nasdaq? Ladies and gentlemen, the heaviest stocks tracked into the Nasdaq is the Dow Jones. No, I'm sorry about that. The Dow Jones. That's a major index, but it's Amazon, Apple, and what was the other? Microsoft. Amazon, Apple, and Microsoft make up 30% of the Nasdaq. Are those companies overvalued? I put up the stock price. Amazon, Apple is about $114, but it has its last report. They reported $34 billion in cash. You look at Microsoft. Amazon cost $3,000, but it reported $33 billion in cash. You look at Microsoft. It reported $13 million in cash. Right. So when you look at that, if you're saying something is overvalued, you got to speak with real data. Say, Prince, you know what? I think these companies are overvalued due to look at their earnings. They don't have earnings. Their earnings are not growing. They don't have earnings to back up. All these companies are going to release their earnings at the end of October. So are the earnings going to match the price? So every year, look at the earnings. Right now, if I wanted to sell this show and for someone who wanted to buy it, the first thing they're going to look at is how much money do you generate? Ask yourself that question. How much money does Apple, Microsoft, and Amazon, which is 30% of the NASDAQ, how much money do they generate? Do they generate, are they generating more and more and more money? Or are they generating less and less money? Right? That's the way you can spot something being overvalued and overhyped. Overhyped and overvalued. I like to look at it and tell people, hey, some people are like, yeah, man, it's overvalued. Okay, why do you think it's overvalued? Is it backed by their earnings? Is it backed by the sales are declining? They don't have as much cash? The stock is growing faster than the revenue. What's the stock price is growing faster than revenue? What is that based upon? If I don't see any financial data and numbers, I would have to assume that the company is not overvalued. So that was the first thing, ladies and gentlemen. What's going on? The next thing we're going to look at this together. Uber wins. Let me share my screen here. I'm going to share the actual document that came out of the UK as soon as I can find it. There we go. Boom. Right here, what I'm sharing my screen on. This came out of the UK. So, ladies and gentlemen, what you can see here on the screen, Uber wins is what I titled this section. Uber had a situation in the UK. This is their document that came out today from the court out in the UK in London. So, pretty much the UK, they took away Uber's license last year. They wouldn't renew the license. Actually, they have it right here. They have a sequence of events right here. Let me pull up the sequence of events that happened. As soon as I can get right back to my right screen. There we go. All right. We're going to go. Let me stroll down here. Okay. So on May of 2012, they were granted a 5-year license to operate in London, right? This was the TFL. That's the transportation for London. That's the TFL, the transportation for London. They're over all of the transportation, obviously, right? So they granted them a 5-year license. And then in 2017, they refused to renew the license after the 5 years was up. In 2018, a chief magistrate justice allowed Uber to appeal and granted a 15-month license. So in 2018, they got a 15-month license. In 2019, Uber applied to renew his license. In 2019, 2 months later, they granted them a 2 month license. They the TFL granted them a 2 month license to resolve two questions that they had. In 2019, later on that year, they refused to renew the license, right? They refused to reuse the license because they felt like all these fake accounts were being created and people can upload, break into their software. So they felt it was unsafe to the public. Why is this so important? Because London is where Uber makes money, right? They make a lot of money overseas. It's a global brand. So when you don't have a license, you can't operate in that country. And if you can't operate in that country, meaning you can't make money. If you don't make money, the company is not making money, which hurts investors. That's why investors care about licenses. This is called political risk. So you're wondering what's going on politically that can stop a company from making money, and also politics can help a company make money. So when we see this, this is why it was very important. So today they were granted a 18-month license and they were fit for full duty. So this is the actual document. This is not coming from what nobody said. This is coming exactly straight from the courts, telling exactly what the layout was. And this, they granted them an 18-month license to be able to operate in London. Uber in return went up 3%. by this happening. Ladies and gentlemen, this is very important because Uber has a very big case. It's having a lot of political risk because Uber's having a very big case in California that looks to be resolved hopefully next month in November. As we know, Uber right now is on the verge of going dark in California, Uber and Lyft. And as guys and girls know, Uber is one of my companies that I have a risk out on, that I'm taking a big risk on. And the reason why this one is so important is because of Uber's this one is so important because this is in the United States and this can cause a riffraff in the long run. So if California, for pretty much California wants Uber to take its workers and turn them into employees. It wants to take their contractors, their drivers, and turn them into employees. So if they do this, this increases the payroll tax for the state of California. Great, they can collect more taxes. But this is a nightmare for someone like Uber, who is a company that makes its money from what? Uber makes its money from people being independent contractors. So if people are workers, this can ruin their whole business model because if they have to classify these people as workers, that means they have to give them Social Security, unemployment. They have to work a set amount of hours. They probably have to get them vehicles, uniforms, all type of stuff that can ruin the business model for Uber. Uber is already not profitable. So if this happens in California, this can set the precedents for this to happen in New York, in Georgia, and Florida, and can ruin the entire business. That's why this is very important. But I believe Uber will come out victorious because in America, ladies and gentlemen, we live in a very capitalist society, and capital is king. So when it comes down to legal and capital in America, when you don't have money and you're poor, you're more subject to injustices. Versus if you have money, you're less subject because you can afford the proper legal, you can afford the proper attorney, you can bail out, all those type of things. And when you look at it, Uber is a 20, $30 billion market cap company, meaning that it has a lot of cash on hand. Even though it's unprofitable, it has enough money to buy the best attorneys in the world, and it has enough money to buy the best business minds in the world to be able to come to some type of negotiation agreement to keep operating in California, whatever the case may be. If this doesn't happen in California, if they can't get California to go, then the stock value will go down because now everybody will be scared because you just lost California. Can this now lead into other companies doing the same thing? Vice versa. If Uber wins in California, the stock value will increase because of its ability to fight through political risk. What you see happening in London, what you see happening in California, Uber is a brand new company that just became um, just became public last year and is going through growing pains, just like Facebook did when they very first came out publicly in 2012. You've seen a lot of growing pains that they had to go through. That's the risk you deal when you have a new company in a new sector. But I still believe that Uber can figure this out, and we will see. Next up, ladies and gentlemen, we're talking about durable good reports. Now, this is something you won't hear about or see a lot because a lot of investors do not know. A lot of, well, most financial professionals do know, but here on the world of YouTube, podcasts, and iTunes and things like that, most people don't know what durable goods are. And if they do know what a durable good is, they don't know why it's important to the economy. Why do we pay attention to the report? Why do I care? So, what I'm going to do here, ladies and gentlemen, I'm going to pull up the latest durable good report. I'm going to tell you what it is. Why is it important? Let's see if I pick the right one here. There we go. As soon as I can get it to look right. This came out on Friday, September 25th. All right. Here we go, ladies and gentlemen. Now, this is the durable goods report. Now, let's talk about what are durable goods. Durable goods are, for example, these are things like cars, bricks, refrigerators, books, medical supplies, washing machines, things like that, right? These are things that have a use for 3 to 5 years. These are things that people use for a while, right? These are things that people use. You can use it for a while, like equipment, desks, things like that. These are goods that are durable that you can use for the next 3 to 5 years. Why is this important to the economy? This is important to the economy because when companies and people start to order durable goods, this is a sign of a uptick in the economy. This is why this is important. For prime example, I want a new computer for my desk, right? But if my money is not coming in, if the company's not making money, Or think about it. If you're a household, if you don't know if you're going to have a job, if your job is weak right now, you don't know if you're going to be working tomorrow, are you going to go out and buy that brand new washing machine? Probably not. Are you going to go out and say, "Hey, I want to go buy some more toys and uh, a new desk, more computers, things like that"? Are you going to be buying these things that are considered durable goods? No, because you're going to be like, "Well, I don't. Well, you know what? My laptop can do just fine for now. I don't know about the future of my company, so I'm not going to go out there and buy that brand new, spanking new MacBook or that brand new washing machine or." That brand new company car, company vehicle. Think about it. When people start to buy a company vehicle, when a church start to purchase a new church van and things like that, that means that the company is doing well for now, and they usually they're projecting that they're going to be doing even better in the future. So companies pay attention. Well, the investors pay attention to durable good orders because durable good orders could be a leading indicator of a good economy. Also, when durable good orders goes up, what does that mean? Manufacturing orders goes up because if people are ordering more wash machines, that means that somebody has to manufacture those wash machines. And then if somebody's manufacturing that wash machine, that means that manufacturing hours will go up. If manufacturing hours go up, that means that more people are working in manufacturing. This is a leading indicator of the economy because if more people are working more hours, that means more employment. If more people are working more employment, that means employment numbers can drop. That means that people's income is going to go up. And what do people generally do when they make more money? They spend more money. So you guys kind of can see how durable goods is a way to tie into manufacturing, that ties into employment, that ties into showing up on people's reports. For prime example, I go out, I buy. I'm. Let's say if I am a huge company like let's think of a company. Let's say Google. Google decides to buy 1 million MacBook computers. Those are durable goods. When when Google decides to buy 1 million MacBook computers, or a school decides to buy 1 million MacBook computers, that means that somebody has to manufacture and ship those orders. When somebody manufactures and ships those orders, that means that the manufacturing workers are working more hours, or they're usually going to have to work more hours, or they're going to have to hire more people. If people work more hours or hire more people, guess what those people those manufacturer workers do. Now they may go purchase that home they always wanted to buy. They may go buy that new car. They may go out for the weekend. They may eat out. They may put money into the economy. And when they go out and they go eat, let's say they stop and eat at Red Robin's, guess what? Red Robin's now that pops up on their earnings reports. So money never dies, it just transitions. Almost like energy, but not exactly, right? Because energy cannot be created. Money can be created. So anyway, ladies and gentlemen, you guys and girls can kind of see why doable reports are very important. So what I've had pulled up here, this is the latest doable reports. All right, says on Friday at 8:30 a.m. Monthly advanced durable goods, manufacturing shipments, inventories for the month of August. So this is August report. The Consensus Bureau. This is where you get this from. This is the census.gov put out this report. The census.gov continues to monitor response data, whatever. All right. So here we go. So for August, you see that the durable new order goods went up 0.4%. In July, they revisited. It went up 11% in July. In August, it went up 0.4%. New orders. Right here, it says new orders for manufactured durable goods in August increased by $1 billion or 0.4% to 232.8 billion. The U.S. Census Bureau announced today the increase is up for a consecutive 4 months, follow 11% increase in July. Now, it's not as big as July, obviously, but that's what they're putting out now. Excluding transportation, new orders increased by 4%. Excluding defense, new orders, machinery also for 4 consecutive months led the increase by 0.5 billion or 15 or 1.5% or 31.2 billion. This comes from the census.gov, right? So right now they're saying that for August, the orders went up. So now that's why durable goods are very important. Now let's go into the comments and see what y'all are saying in the comments. Somebody commented and said, Robert Okay, what's going on, Roberto? You up pretty late tonight? It's a pretty late night show. Thank you for joining the late night show. He said MAGA KAG. I'm thinking those are stock symbols. I'm not sure what those are. MAGA KAG. Are those stock symbols? All right. So the next thing we're going to get into, ladies and gentlemen, we're going to get into forbearance decline. Now we're going to first thing we're going to talk about what is a forbearance? What are forbearance? Why are they important? Now we know what a foreclosure is. We know what a mortgage is. A mortgage is when you purchase a home and you buy a home or whatever the case may be. Foreclosure is when you can't afford to make your monthly mortgage payments, so your house is taken back or whatnot. That's going into a foreclosure. Foreclosures are followed very closely by investors because that could be a downturn in the economy. So if foreclosures are increasing, that means people are losing their homes. Most time people like to keep their homes, so that means that people don't have the income. If people don't have the income, that means they don't have the job. The list just goes on, right? Forbearances decline. Now, ladies and gentlemen, I want to get into this is why we follow these things. So let's look up the latest report. You guys and girls who tune into the show already know we're going to go to the Mortgage and Bankers Association, the MBA.org, who follows the real estate market very closely. And this is the latest report they put out, and they put this out today, right? September 28th. Shares of mortgage loans and forbearances declined by 6.87%. Now, a mortgage we spoke about, that's a payment on the house. A foreclosure is when you can't pay for the house. A forbearance is what they put in place to stop people from losing their houses, right? Say, hey, for prime example, let's say if I can't pay my mortgage, my mortgage can go into forbearance, meaning that hey, he can't afford to pay his mortgage for the next 4 months, but we're going to extend his loan. He's going to pay these mortgage payments later on down the line. So this is stopping people from losing their houses. So if you see an increase in forbearance, that means the government is stopping foreclosures. That can be, if you see an increase in forbearances, the government is stopping people from having foreclosures. And if you see the government stopping people from having that foreclosures, that could be a sign of a very weak economy, because why is the government increasing more and more people stopping from their homes? If you see a decline could be more people are getting out of forbearances and they're able to make their mortgage payments. If people can make their mortgage payments, that means that they probably have a job or whatever the case may be, or maybe their business is doing well, so they can make their own mortgage payments. This is very important because as an investor looking forward into the economy, if I see forbearances increasing, that means you're stopping people from um, losing their homes. That tells me that this could be part of a stimulus package. This is what it was. It was part of a stimulus package to stop people from losing their homes. So that can tell me that could be the signs of a weak economy. So I like to see forbearances go down. Let's see what they have to say here. The shares in Fannie Mae loans and forbearances dropped for the 16th week in a row to 4.46% on a 9-point basis improvement. Ginnie Mae loans and forbearance remained flat compared to its previous week, a 9.15. And the forbearance shares for portfolio loans and private labeled loans, PLSs, also remained flat at 10.52%. The percentages of loans and forbearances for depository services decreased 7 base points to 7.11%. Loans and forbearances for independent loans, IBM, decreased 3 base points. All right. They say the share of loans and forbearances continue to decline, is now at a level not seen since mid-April. So they're saying the shares of loans and forbearance continues to decline and is now at levels not seen since mid-April. So that's good. Mid-April is when everything started to take a massive downturn. Many homeowners with GSEs loans are exiting forbearance. All right, that's good. They're exiting forbearance into a deferral plan and resuming the original mortgage payment, but awaiting to pay the forbearance amount until the end of the loan. Okay. Said Mike, I can't say his name, Fortin Frattoni. Hope I'm not mispronouncing his name. Probably am, but excuse me. He is the senior vice president and the chief economist for the Mortgage and Bankers Association. However, the overall picture is still somewhat of a mixed bag. The recent uptick in forbearance requests, particularly for those in FHA, and VA loans, is leaving the Ginnie Mae shares elevated at a pace of new requests meet is exceeding the pace of exits. So he's saying that it's kind of flat because yes, we're having people are leaving forbearances, but also we have people applying forbearances. So this is the latest on real estate or whatnot, right? Let me get in here. I didn't even get in here. I was talking about forbearances decline. Oh, we got Mike. What's going on? He said, Prince, what's going on? Uh, He said, okay, so what's going on? Mike is out there in Canada. This is a late night show. The Lemonade Brothers are back again. What's going on, Mike? Now, Mike, I've been following Lemonade for ladies and gentlemen. For you don't know, Mike is an avid listener out of Toronto, Canada, and he was very big into lemonade. So I call him Mr. Lemonade. He's out there sipping on lemonade out there in Canada. Here's a shot of lip. It's not really lemonade, it's water, but I still got my Investor Show mug. If you don't have it, check it out in the description box. But Lemonade, we've been following Lemonade. So, ladies and gentlemen, there we go. We talked about the forbearances. So, the first thing we went into, we talked about the stocks rebounding, taking to the upside. I'm going to be a forever bull and a sometimes bear because the bear market will come out and decline stocks at times. But we know the longer you hold stocks, the less riskier they become. So the longer you hold them, so if you buy a stock today, you're thinking about what's going to happen in April. The likelihood of you losing money in the short term is very high, but in the long term, if you hold good companies, they become less and less riskier. We talked about the stock rebound. Next, we talked about Uber winning this case out there in the UK and how it has a pending case out in California and how this is very big for investors due to political risk. You see how politics can hurt, make or break a company. By leaving California or by leaving the UK, not being able to have a license in the UK, that can hurt a business big time. That is considered political risk. We went over durable good reports. We talked about what are durable goods, why are durable goods very important, why investors follow durable goods, and we went out on the latest report on durable goods, and we talked about how durable goods ties into manufacturing and how manufacturing ties into worker hours, unemployment, and things like that. Also, we went into forbearance, which is real estate. Real estate, stocks, and business, they all tie in together. That's the whole investment market. And we looked at actual financial reports, right? We talked about a decline in the mixed bag that we kind of got from the latest report from the Mortgage and Bankers Association .gov. Now, ladies and gentlemen, the reason why I talk about this, so many people say Prince stocks are overvalued. Prince real estate is it's a bubble that's about to burst. It's like saying, guys and girls, it's going to rain outside. We know it's going to rain. I live in Denver, Colorado. I'm coming to you guys and girls live. If you think it's going to snow, you're right. It is going to snow, ladies and gentlemen. But the question is, when is it going to snow? If you're going to sit back and you're going to talk about how horrible the stock market is overvalued or asset class is overvalued, read the reports. Now, if you come to me and say, Prince, I believe this company is overvalued because it's unprofitable. It's losing money hand over fist. They're losing more and more money. They have less and less cash on hand. Now you got a point. If you come to me and say, Prince, I don't like this company due to the fact of, looking at the unemployment is rising. Look at the manufacturing hours, Prince. Manufacturing hours are declining. Look at unemployment because if people are unemployed, they can't buy those Christmas gifts. Prince, look at manufacturing hours declining. If manufacturing hours are declining, that means that people are manufacturing less and less. And if people are manufacturing less, it's nowhere in the world people can buy more. Now, when you start to hit me with financial data, that's why I love finances because I can look at financial reports. If you hit me with financial data, that's when I would say, you know what, you got a point. But if you're just speaking off of emotion, then you don't know. Because so many times we get focused into what's going on around us. We see everybody around us losing their home or losing their job or working in between jobs. We become so focused on what's around us that we can't step away and look at what's really going on around the globe. And the only way to really know what's going on around the globe is to read financial data, financial reports. Ladies and gentlemen, when market is crashing, when chaos is happening, that's when financial media makes the most money. So when stocks are going up, stocks are doing well, things like that, Nobody cares. Nobody watches financial media. So financial media has an invested interest to heighten fear. When people are fearful, they watch more television. They tune in more. When stocks crash, let's say tomorrow morning stocks crash 2,000 points, everybody tunes into my podcast. I see my viewership just jump dramatically. When things are going well, everybody, I don't get that much. Uh, my ratings are not as high, right? So it's the same thing with bigger media platforms. People like to heighten fear because when people are fearful, they watch more news, right? It's kind of crazy how the world works. So be very mindful of that, ladies and gentlemen. And I want to turn you guys and girls into from being just financial people into financial professionals. Let me see what y'all say in the comments. We got some comments here. Okay. Jameis White, it's pretty late over there. He's out in Hawaii. What's going on, Jameis? He says, "What do you think about Ford?" Ford, I got off the Ford bandwagon years ago. I got into Ford right when it was single digits, like $8. I remember that back in the day. I got into Ford because it paid a big dividend, and I got so caught up in the dividend. But the problem was the stock kept dropping. You can't be so loyal to a dividend that you forget that the stock price is dropping and don't realize. To me, Ford is a very mature company. The growth for Ford, how much growth can Ford actually do? That was the issue. Ford was paying a heavier and heavier and heavier dividend. My dividend yield was going up, but the stock price was going down. And that was not a stock that I wanted to do when I look at its potential growth into the future. Ford is a very mature company. Ford is good for someone who wants to make money, but then again, Ford is not that good for someone who's looking for growth. So I'm looking for a company. For prime example, Ford is like me. I'm 36 years old. Just had my birthday. I'm 36 years old now. Versus my son, who's 9 years old. He has way more growth than I have. Ford is very mature right now. I don't know if Ford has opened up any more revenue streams or making more money, but that's what I was thinking. Ford, when I look at the potential growth in Ford, it's not really there. It's a pretty mature company. It's a cheap company, but it's a mature company. But also, don't get so caught up in dividends that you forget about growth. All right. Mr. Martinez said FLDM is looking good. Oh, FLDM. Who is that? Let's see what FLDM. Let's take a quick look at FLDM. This is a late night show, ladies and gentlemen. I'm surprised you guys and girls even here live. I wasn't expecting nobody to be in here live, but you guys are still here. FLDM. Okay, we pulled this company up. It's an unprofitable company. I don't. It's a corporation, an American engaged in design, manufacture, and sale of biological research equipment. Okay, but this is an unprofitable company. Let's go to Yahoo Finance, FLM. Yeah, okay, FLDM. Pulling this up on pulling this up live. Never heard of this company. It's a biological research company. Okay, let's look at the finances of the company. All right. So we're looking at this. Let me pull this up so y'all can see this at the same time. So you're saying this company looks pretty good. Let's see if it does look pretty good. Okay, FLDM. Let's go to its cash flow statement. All right. Also, these numbers in thousands. So 2016, it lost 39 million. 2017, it lost 24 million. It netted a loss of 24 million. 25 million it lost. It lost $35 million last year. Okay, so it's a losing company. It's not a profitable company. But a good thing is revenue is growing. I do like its top line. Top line revenue is growing. It went up from 104 million to 107 to 2019 last year. It did 127 million. Let me look at their quarterly. What did they report last quarter? 26 million in total revenue. Revenue is kind of growing. Cost of revenue, gross profits are okay. Operational expenses, This when you get down to the negative. So the operational expenses are kind of staying the same. Not too crazy about that. Let's look at the balance sheet, how much cash you got on hand. Let's see what the total assets are. Okay, 300, nope, 264 million. They reported, okay, so they reported 282 million in current assets. They got 95 million in debt. Total assets. Let's look at these total assets. Let's break them down. So they have 78 million in current assets, but they have 95 million in total debt. Not something I really like. Net debt 11 billion. So I will have to look at your competitors. Not too crazy because think about it. Their current assets. Current assets is assets that can be turned into cash within less than 12 months. So that's like you, for example, you got money in your cash, you got money in your checking, savings, money market account. They got 78 million. Cool. But then again, their total debt is 95 million. Not something I'm too crazy about. Right? Now I don't know a whole lot about this company. You have to look at the competitors. Right? So what else y'all say in the comments? He said, One Love Lon says, boom, finally caught a live show. Yes, and this is a very, very crazy time right now where I'm at here in Denver, Colorado. It is 12 o'clock in the morning. Thank you for catching live. The Corn Medic says, great show from Columbus, Ohio. Okay, cool. All right, cool. Nice to see you. And Jimmy White says, he said, that's what I was thinking. Oh, he asked me about Ford. Okay, cool. Now we said Culture and Conversations. Y'all go check out Culture and Conversations out there. He said, we see you. That's my cousin out there down in Atlanta, Georgia. Great show, by the way. Thanks for checking in. Appreciate it. Okay. One Love Lawn says, I own a lawn care company. Just started investing this year. I have not done I have not done bad, but not great either. Would like to start learning more to grow more. Originally, one time investment, $600, now $2,200. Okay. This original investment that you made, was this your lawn care business or was this with your portfolio? And with that, 600 to 2,200, that's a pretty nice return. I want to ask you the question of what did you invest in? What type of risk are you taking out there? Right? One Love, I'm trying to do my best. Would like to be able to open something so our employees can buy into it. Oh, nice. That's good you're looking at for the employees. Thank you for catching me live, One Lawn Services. I definitely like what you're saying. Where you located at? One lesson I use E-Trade. Most everything I learn is from your podcast. I listen when I mow. Oh wow. He said I use E-Trade. Mostly everything I learn is from your podcast. I listen when I mow. Man, that's crazy. You went from 600 to $2,200. Congratulations, man. That's pretty nice. I do want to know what you invested in. What did you pick up? Okay, I can't say your name here. He said we are watching from no Noribia, Kenya. It's in Africa. Okay, all right, all the way out in Africa. Nice, nice. Okay. He said just toss cash into an account. All right, here we go. Intellect to the corner. Do you believe McAtee IPO will do well? Oh, that's an old company. I thought McAfee would already be a publicly traded company. With that IPO, with their IPO, I don't really get behind IPOs. I think they're overbought. I think they get crazy, right? Um, I have to wait till it comes out. Their IPO, I don't know. McAtee IPO is so old. The companies that do well in IPO are the young, hot, like Airbnb. That would be a hot IPO. McAtee, I don't know how hot that one would be. It's a good old solid company that people will probably buy into. But usually the IPOs that I see get all the buzz unless they get like some big names behind it. Like Snowflake was the hottest one of this year. That's because Warren Buffett got behind it. It was a new cloud computing thing. It has a lot of growth potential. Those are the ones that kind of get all the press that everybody goes crazy about. McAfee, I don't know. It's an old school cybersecurity company, so I can't really say. One Love said, I honestly brought all lawn care aggressive stocks. See, that's what I'm talking about. That's being smart. That's what's being smart about it. He brought into what he knows. Prince Dykes don't know nothing about lawn care. You know what I got? I have a pushing electric lawnmower, right? I go outside, I got my electric lawnmower, I charge it up, I put it in. I used to have a lawn guy, I think it was a lawn boy, used to come by and cut my grass, but they would cut my grass, but they wouldn't touch my rock area. So I would be paying somebody to cut my grass, but then I have to go outside my weed eater and have to pull all these weeds. I'm like, if I'm coming out here and I got to take care of all these other weeds and stuff that's around my trees and stuff like that, I might as well just cut the grass myself. So all I got is an electric lawnmower. My wife brought an electric lawnmower, and I go outside and I cut the grass with an electric lawnmower. I put it back up under the shed and I put it back on the charger. I don't know a lot. I'm not very versed and smart in the electrical and the lawn care business. You are. And he used this. He went, I always tell people, if you work in retail, look into retail first. If you're in the military, look into military contract and stocks. You in lawn care, you can bring lawn stocks to me and say, hey, Prince, these are lawn stocks I've been looking at. Then I can look at them. So these companies, that was very smart of you, starting with what you know. So often we try to get into what we don't know, but you start with what you know. I'm very surprised, man. It's like midnight in Denver, so I know it's 2 o'clock in the morning on the East Coast. I'm very surprised that you guys and girls are up this late at night across the globe. Oh, Columbus, Ohio. Nice, nice. Jimmy C said high risk, high reward. Yes. I like high reward. I like a high risk, but I don't like dumb risk. Right? Some people go put all their money, play the field on a crap table and say, look, man, high risk. If I roll the dice and it hits an 11, guess what? I just doubled my money. High risk, high reward. But that's also, it could be something called a dumb risk too. Don't be dumb out there. He said, I'm joining the university that you have. Appreciate that, man. Congratulations. Congratulations, man. Very smart guy. Very proud of you. Oh, there he is. I can't. PT Forever. What's going on? PT Forever, man. I think for PT, I think he's out in Phoenix, Arizona. He said, I work nights when everyone should be sleeping. Saying hi from Phoenix. See, I knew he was from Phoenix, Arizona. Thank you for tuning in, man. He's a very big advocate listener of the show. So I thank you for tuning in on the late night show. He said he brought One Love Lawn, said he brought HALAPF. Let's see what those companies are. You're making returns like that. I need to get into lawn care too then. And I'm smart enough to say, you know what? I don't know. Sometimes you got to be smart to say that. And Ford, so you brought APF and Ford. Okay. Ford must have had a good day today since everybody's kind of asking about Ford. Let's look into Ford. In 1 second. Let me see Ford real quick. Then we're going to probably take a look at one of these companies that you got here. Oh, yeah. Ford went up 2% to $6. Okay. Decent day today. So far, nothing wrong with that. Okay, One Love Lawn Care said, my wife opened the E-Trade account for me. I took the cash we made that week and tossed it in on the account. Very smart. A guy was telling me, he said, Prince, man, a guy, just before I came on the show, he DM'd me, Max B. That's my guy. He's out there in Washington. He DM'd me, he said, Prince, man, I want to say, uh, I got stuck with stocks, but you kind of helped me out with it. I got stuck with investing and whatnot. I said, you know what? I get stuck all the time, but I know I have to learn it. I have no other choice. What else am I supposed to do? There's only 3 ways you can invest: real estate, stocks, and business. If you learn the finances of companies, you can apply reading cash flow, balance sheets, income statements, learning the fundamentals of companies when people buy and sell. You can apply that to real estate, you can apply that to business, and you can apply it to stocks. Ladies and gentlemen, why you see stocks move up and down so much, it's the only asset class that moves so much due to the fact that, number one, we're people, we're very emotional. And due to the fact that we're very emotional, guess what also happens, ladies and gentlemen? We can touch stocks at any time. I own land. If I wanted to sell land, it would probably take me a couple months. If I wanted to sell my home, it'll probably take me a couple months to sell my home. But if I want to sell my Apple stock, all it will take me is 30 seconds when the market opens. Right? So when you tie those emotions that we have in, and then we can touch something at a moment notice, and we're very emotional. This is why you see so much volatility. Take advantage of other people's volatility. When people think the world is coming to an end, this is when you can take advantage. How you cannot get caught on the downside when you have these massive sell-off happen, having money in cash, and also looking at things true value, the intrinsic value. Hey, Miss Olivia, how you doing? You up pretty late tonight. She said Airbnb would be a nice IPO. Nice. Okay. Somebody on Facebook says, "Hey, how you doing?" South Carolina's in the house. So somebody commented say from South Carolina on Facebook. All right, cool. One Love said water made me $80 off of $7. CNRT 75 shares at $3. Sold them this evening on the extended hours. Okay, extended hours, ladies and gentlemen. That's after the market close. He said he has APA, oil, and coal. My GMP had my grandma, I'm thinking. He said my GMA has Ford, so I thought I'd buy it. I don't know why my screen kind of. He said he lost on MRO. That's the Marathon Auto Company. He said you said don't marry the stock. Don't never marry a company, right? You marry somebody as long as they're beneficial to you. When they're no longer beneficial, that love, when it comes down to an asset class, has to come with a condition. For prime example, when you buy the company, and you're with the company as long as it's beneficial to your portfolio. The day that it turns, I'm not married to Uber forever. Uber doesn't do well, I'm out of there. I'm going to somebody else. Right? This is not like some people get married to the company and they try to just make it right without looking at the numbers. You see that happen all the time in relationships where you try to see the best in someone and you don't want to be wrong and you just blah 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 blah. Sometimes you got to know when you're wrong and get out of there. Oh, you say something about podcasts. Okay. One Love Lawn Care Service, man. Thank you for tuning in, man. Ladies and gentlemen, I don't know why I'm kind of getting a lag here a little bit on my end. But ladies and gentlemen, I want to thank y'all for tuning in. I see a lot of people coming in tonight. Uh, but I didn't expect that many people to be on the late show. But this is the late show today on the Investor Show. We had some very good comments today. I hope y'all got, you know what? I would look into it, but we're getting a little bit behind on my side. He said, so yes. So, ladies and gentlemen, hope you take advantage of the downturn in the economy and the bounce backs. You will see volatility, but just remember, the longer you hold something, the better off you are. I'm going to get into a little bit more advanced trading, like options. I'm going to talk about. We're going to look into some more companies. You know what? Let's take a look into one more company. One more company, ladies and gentlemen. I'll give me 1 second. Let's take a look into one of these companies he got up here. This HAL. All right. Let's see if I can get into this. All right, what's going on here? Like we having a system overload. Y'all give me 1 second here. All right. All right. All right. Now I'm back here. Let me see. Let's take a look at one more company here. Who we got here? HAL. I never heard of this company before, but let's take a look at it. Let's see if it's a bunch of hype. It went up 3% today, but today the market went up. Mm, bearish. Okay, let's look at the finances of this company. Now, ladies and gentlemen, when you look at the finances, that's considered the fundamentals. We're going to look at the technical data too. Okay. Mm-hmm. Ooh. Okay, it's a profitable company. Okay, I see you one care line service. $12 company that is profitable. Most companies that are $12 are usually not profitable. So let's look at the profile of this company. Let's see what the heck is this thing. Let's look at the profile. This is HAL, Hotel Alpha Lumia. Okay. This is out of Houston, Texas. It's a energy oil company. Hmm. That's a profitable oil company. Let's take a look here. Let's see if I can pull up the chart on it. Let's take that blue line off. So far this year. Okay, so it came out at $24 this year. So it's lost 50% of its value so much this year. So far this year, around about April, right when the market started to sell off, it went from $24 all the way down to $12. Wow, no, $8. Man. So it went from $22, it went from $21 to $8 in a matter of not even about a month. Seemed like it bottomed out. This is technical data. When you're looking at the chart, ladies and gentlemen, this is considered technical data. Now let's look at here. Okay. So it had a massive fall off because oil hasn't had a great year this year. Now you're looking for oil to come back. Let's see how was this company performing a year ago. Let's go back to the max. 1 year ago. Okay. So at its peak, it was so $19-20 is its peak. And that was back in the 80s when it hit that. So let's look in the last 5 years. Whoa, no, 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 no. I'm definitely wrong about it. That's $50. Let's go back. That wasn't its peak. I must have read that chart wrong. Unless it did a stock split. Hmm. I was in the 80s. So no, it was $50. This company was $50 in 2017. So it has a bearish trend. So now it's at $12. What's causing this massive decline? This is a bearish trend. Y'all see this, right? 2 years, it's been on a bearish trend. When you look at it over 5 years, it's gone up, but it hit this deep bearish trend ever since 2018. It has been hitting new lows ever since 2018 for the last 2 years. You really can see it in this chart here in a 2 year chart. The 1 year chart is a bearish trend. Year to date is even a bearish trend. But it is a profitable company. The finances look okay, but it's in an industry I don't like to deal with, oil. I'm not a big fan of oil. If you really follow me, you listen to me, oil has too much political risk. Um, it has international risk, being overseas in the OPEC, OPEC, in the OPEC. They control the price of oil by pumping supply and demand. So that's why. So when you have political risk mixed in with international risk, that's not something I'm too crazy about. They can just wake up one day and just change the price of oil. If somebody get pissed off at somebody, that's why I haven't been too crazy on it. Okay, let's see what we got. Let's see what we got in here. Well, that's a good question. Oh, is Tesla going up today? It's a hard time to see right now. Let's take a look at the futures. Let me take a look at the futures right now. See if we got any strong futures. I think Tesla, I'm pretty sure Tesla had a good day yesterday. Let's see what we got here. Okay, Tesla went up 3% yesterday. Let's see what our futures look like right now. They're a little mixed. They're a little mixed right now. Europe is mixed right now. Dow Jones already came out. Europe is kind of mixed, so it's no strong point direction. So it could be a mixed signal. Mixed signal is not a big thing I can see right now on the Tesla coming in right now. Looking at tomorrow. Oh, and it pays a dividend. All right. But yeah, ladies and gentlemen, thank y'all. I got to get out of here. I see y'all comments, but I got to get rolling. I thank y'all guys and girls for tuning in to tonight's late show. But until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe. Ladies and gentlemen, don't forget that like, subscribe, comment, and share button. Check out the whole entire book series of Wesley Learns if you haven't done so already. And until the next video, podcast, cartoon, whatever else crazy you see me do around the globe. Peace. Be safe. I'm out, and thank you.